Hi, welcome to Tech Nomads Club. We're here today again our regular podcast, Meet the Member. My name is Evgeny Pavlov. I'm the founder of Tech Nomads Club and Tech Nomads Co-Mobility Platform. So today we're joined by incredible VC investor, Aleksandra Zotova. Welcome to our podcast. We'll talk today about pre-seed rounds and founders at the pre-seed stage. We talk about a Series A stage. And we also talk about private and angel investors in the landscape. So I'd like to pass the word to Alexandra. So welcome to our podcast. Let's please introduce yourself briefly.
Thank you, Jenny. Firstly, I would like to express my gratitude for inviting today, and I'm happy to be a member of Tech Nomads Club. So let me very quickly introduce myself. I've been in VC for more than 10 years, and I started my career in early stage VC firm, Ruvento. Now I am investment director at the CVC arm of the Ultima, which is a multi-asset management firm. A few words about my previous deals. So in total, I've invested in more than 40 companies. 2 of them grew to unicorn level, mainly in deep tech stage. Today, I'm focusing more on the late stage companies. And among my recent investments were usual suspects like Anthropic, Epic Games. I also invested in Telegram, in CoreWeave, which recently IPO'd. So happy to share insights about different stages today to help founders both on seed, Series A, and later stage. Moreover, I just wanted to add that also I am leading at the Ultima, I'm also leading the product, which is a digital investment platform for our clients. So it's a combination of both VC as well as, platform-like system. And this trend is now really evolving. So if you have questions, also happy to share about this today as well. But let's move to the seed and Series A.
Yeah, thank you. Thanks a lot. So I have plenty of questions. We'll try to recap into some meaningful. First of all, from point of pre-seed founders and the landscape of the pre-seed level, when they lots of highly skilled professionals, ex-founders, and just founders who starting the I would say business venture. You as a VC investor, if you can define a little bit in terms of the qualities of the founders, when you're looking at the pre-seed level, maybe 2-3 qualities, maybe one main quality of the founder. What you're looking at? Yeah.
Thanks. Great question. So first and foremost, quality and I would say combination that today all VCs are looking for, and this trend is growing. I see it, I hear this feedback, is a founder market fit. So the experience of founders in the sectors where they are building the startup. This is really critical today. So if you are going into fintech or logistics, it's really essential that you have some kind of background in it, some domain knowledge, and understand key problems in this sector that you are solving. The other traits of founders, which are scientifically proven and mentioned both by VC as well as researchers, are qualities like integrity, sense of urgency. CEO is typically should be used to know all the time, and they don't take no as an answer. Of course, it should be relevant, and all solutions and your pitch that you bring to investors should be data driven. It should not be just words, but at the same time, CEO should push and lead the team at the same time.
And from perspective of the trends of the industry, whether it's within a couple of years was reshaped, actually there is rumors that founders no need to have a charismatic approach anymore, so on and so forth. Or what you see as a reshape of the in the industry, and also qualities of the founder, or yeah.
That's also an interesting question. From what I see specifically today, again from the high level, I wouldn't say that this trend changes my work and every day, but from what I see as the absolute latest trend is, on the one hand, as you mentioned, people may develop a cutting edge solution and do not need charismatic approach. But on the other hand, there is some kind of vibe. There are vibe founders who emerge who don't need technical background and have only charisma and, of course, many other traits and business understanding of business side, which is sometimes actually requires a lot of technical and structured mindset. So at the same time, also, there is a trend of, in terms of age, yes, there are still a lot of founders who kick off companies early on at their 16 or 18 years old. But at the same time, still there are a lot of founders like 30 plus, and they're also very successful. Actually, among unicorns, 30 plus founders are more dominant. In terms of overall trends that emerge, today VC become really data-driven. More than 30% of data-driven VC report that they get a large chunk of pipeline from their AI-based tools. Today, these platforms are like Harmonic and other. But still, it's crucial to have relationship with VC, and for founders, I would say this can be a barrier. They should acknowledge that and maybe build more warmer network, try to get through warm connections to the VC. This is really crucial.
In terms of the, if you going slowly into the actual, we discussed about the founders, and going into the pitching and presenting, what you can highlight as a basic red flag for the VCs who just going to reject founder, maybe top 5, top 2, I'm not sure, at the pitching, or maybe either we can ask about pitch deck as well.
Yeah. Here, I would like to give a shortcut. I worked a lot with founders. So at my Ruvento Ventures, when I was at Ruvento Ventures, I worked with founders who applied to Y Combinator and other accelerators, and they just didn't have any other options to build a company elsewhere. They were directing to the largest markets and had to, raise capital there, validate everything there. So what I recommend usually, use YC template for the pitch deck. Watch various examples of how YC founders present. This is, again, scientifically proven, validated way of how VC understand founders. A lot of much text in the slides is no-go. People listen to you as a founder. You just show a few metrics, a few points which provide more data to what you say. Founder, CEO who is pitching is central. No need to build complex slides. They should be short, crisp, succinct. In terms of how to prepare for the pitch, again, maybe you would say my approach is old school, but I would recommend, again, YC posts questions, which are typically asked at pre-seed, seed stage at the interview. There are like around 100 questions. Just prepare them, like 10, 20, 30 seconds for an answer. Have them prepared. There are a lot of great questions, like what makes you different, what you understand about the industry that others don't. and many other really critical questions which you should address very quickly and in a very sharp and short way. Like clarity, very short ability to formulate your thesis very shortly and in a structured way is key here.
I think the last question about this topic. What's the I think maybe one mistake you can spot it in a pitching, which you cannot tolerate, literally.
Well, here that's a little bit. I'm biased here. I've seen a lot of ups and downs in this industry. I believe that being lack of integrity, lying, and overestimating figures is a big no-go. VCs, angel investors will find it out. And today, in the world where information is spreading much faster, this is really dangerous. That may be very hazardous for the reputation. If the person has integrity, if the founder has integrity, it's always possible to, exchange feedback, to change something, to update. One thing that I wanted to recommend here, when you do a pitch, just before going to VC, come to other experienced founders who already pitched at later stages and get their feedback. And not one founder, maybe 2, 3, 5. Get to friendly VCs and get their critical feedback. And you will be prepared for that afterwards. That's how I've done it myself, and I've seen it among many successful founders who raised Series A, Series B, and etc.
In terms of the early stage, what's important for nowadays for the VC? It's founder chemistry, it's market size and traction, or it's a product market fit. What's you as a VC investor look at as priority, or it's all together?
It's all together. It's all together. But when a founder comes to VC, especially today with all AI tools and ability to validate everything much quicker and much cheaper in some cases, there is no excuse for coming without providing metrics about potential problem solution fit and product market fit. Of course, the founders are not so deep-pocketed, may not be deep-pocketed, and it does not make sense to invest huge amount of money in order to validate. But running small tests and getting some numbers and providing proof about product market fit is key. It doesn't make sense to come before with idea. You can start building relationship with VC, get advice. That's a good thing to do. But when you go and pitch for raising funds, it's doesn't make sense. For B2C startups, you show metrics. For B2B startups, it's possible to show some LOIs, but they will be further validated, proven. VC may want to talk to your potential customer, so it's important to know. Market fit is also key. So today you should be able to explain why now, why today it's the right time to go into this market. So for example, like I saw a very interesting startup which is building a digital platform, 2.0 platform for freelancers for paying pensions, for them to arrange pensions for them, because they are not corporate employees and they face some problems with this and they want to be secured. So today tools emerge for this kind of new categories of users, and this market is growing. Why today? Because the critical mass of such users is already huge, and the tools emerge. This solution is addressing the platform. So the startup name is Penfold. I'm not investor there. I was just excited by the problem solution fit that is out there.
Cool. In terms of just about you it's about to ask you about example, actually.
Yeah.
But in terms of the example of maybe which company you invest and was outperformed at the pre-seed stage.
Yeah.
It's outperformed. If you give any examples of the companies outperform your expectations, maybe there is one.
Yes, I would say Firstly, I wanted to say that I believe that all founders building companies are great. They face they get out of comfort zone, and even if you are not able to validate the market, but you can do it fast and efficiently, that's also a great result. I believe that being in entrepreneur's shoes is really hard, and just the fact that you go build a team is already a huge success. It's a huge achievement, and VCs are not people who are to judge. But in terms of my portfolio companies, I would give an example of X Robotics startup. This is one of my favorite. They develop robot for pizza making. Wow. They are international team, but they kicked off their company initially in the US, in California. Now they work with pizzerias. They are B2B. There were several when we invested, there were several startups like Zoom Pizza and some others, and we did a lot of analytics, what would be the great point to invest. So we realized that increasing efficiency of pizzerias is where we see most potential. And it would be economically more viable for a startup, because every robotic startup, even humanoid robots, which are hyping today, there is a huge issue with unit economics. How often you need to maintain, to change parts. The cost of such robots is typically really huge, and they break a lot. Mm-hmm. Even with AI inside, it's usually really, really expensive. But this company managed, they went through several prototypes, and they really managed to, now they are scaling, now they're shipping their product, and frankly, they exceeded my and my team's expectations, because robotic startups were hit hardest during 2023 recession, interest rate rise. These are factors which has create a hazard for every startup, for every venture capital firm, because the capital becomes very expensive, and you need to be able to show revenue fast. You need to have, runway. You need to be break even or close to being break even as much as possible. So this startup had all those issues, They faced all the issues, they resolved them, and they emerged in a much stronger state right now. So now they are manufacturing.
Wow.
And they are doing it in the US, so they are really they are not really hard by any, geopolitical changes, geoeconomic changes of tariffs. So they are feeling really healthy. So they overexceeded expectations. I think that for AI startup, it would be much easier today. And now they would be able to capitalize on the trend of such humanoid robots, because they can integrate some AI inside. And but they reach the product market fit already. So now they have a vision of building more sophisticated solutions.
Cool, thank you. In terms of the just last question about pre-seed, if talking about pre-seed topic, there's lots of founders have a startup business idea, done the research, so on and so forth. They have no revenue. How they should work effectively with the VC when it's pre-revenue? Obviously, VC is looking for the traction, so on and so forth. What you should suggest to them, to the founders at this stage? I know there's another topic, private angel investors.
Yes.
But maybe if we can a little bit outside of this scope, say a couple of words.
Absolutely. I mean, going without revenue at the stage of acceleration or incubation is okay. They may be willing to see, today with the AI startups hype and those millions of ARR emerging really fast, a lot of VC acknowledge that, and some criteria may emerge which are really sometimes unrealistic to to match for majority of startups. Okay, there are some which hyped, and then if you're not in this cohort, VC may have a mindset that, well, I want to pick those who grow fastest. That's typically the VC mindset. But I also I run, besides VC, I run acceleration program in partnership with Singapore government. We had more than 15 startups graduate from the program. So when we accepted them, and from what I see among accelerators like Alchemists and other, it's okay to show metrics, proving validation, operational metrics like conversion on the website, or again, as I mentioned, LOIs with B2B clients. Maybe I can recommend a book inspired here, which was written by one of the senior and most experienced product managers in the US and globally. And he mentions, well, there are a lot of ways to validate the MVP, both quantitatively and qualitatively. Of course, you can run user research, but you can also get some metrics, early metrics from the website, and one needs to go for it. There are a lot of tests to be made and metrics to be shown. And you can always go and not pitch hard, but build early relationship with VC and get initial feedback, build a relationship, especially through warm connections with accelerators. Ask your friendly founders to introduce you to someone in the acceleration program. Like in the UK, these are Antler or some other. In the US, also there are top 5, top 10 accelerators plus industry-focused ones. So it's always possible, through warm connections to get preliminary feedback, kind of back channel. Would those metrics be fit or not? Maybe I should run some other tests. Everyone understands that it's not always possible to get revenue right on the spot, but if you can, and if competitors do that, maybe it's worth trying to arrange. Again, today there are a lot of tools for that.
From your experience, just outside of the topic, it's related topic. From your experience, what early stage founders, pre-seed stage founders should expect to raise at pre-revenue, should expect to raise from the VCs here? What's an average? I know US is different, but
you mean in terms of the size?
In terms of the
size?
Check, yeah, in terms of size. Not valuation. Valuation could be different.
Yeah.
But what they should expect? Because probably our listeners of the podcast could be interested. Okay, I can get £10,000 or I can get £100,000, not more than this. What they should expect in your experience?
In accordance to latest Carta metrics, I would say still US is a great benchmark. UK is the second largest VC market if we, at least it has been in 2024, if we don't look at China, which is really specific and does not really accept international investors and founders so much. From what Carta mentions, the average check size on the angel round is approximately $300K US dollars. Again, here in the UK, I would say it's around that, maybe a little bit lower. Pre-seed is below 1 million. So Carta posted that rounds above 1 million at pre-seed stage were really rare. So if you go and raise, you should, budget and understand that most probably you will be able to raise below 1 million. And of course, seed rounds are a couple of million up to 5-7 million. It can be. It depends on how capital intensive the business is, and on some other factors. Series A, if we go a little bit beyond, is around 5, 10, 15 million on average.
Can you see, last question, we go to Series A topic, relate to the valuation, can you see any trends of high valuation of AI startups, or not really? It's
Definitely. More than, of course. In accordance with various data sources, today from 40 to 70% of funds is flowing to AI. And of course, valuations there not only they don't drop, because down rounds has been a trend since 2022, and flat valuations across the globe. But AI has been the outsider, like an outlier. From what I have seen in my previous VC practice, I've been through first AI hype in 2018 already. So yes, this hype is typically starts and then ends. Anyway, there will be some startups won't survive. For example, last week we saw Builder AI.
Yeah.
Actually, I was one of the VCs that invited me to participate in their round, and during those 2 years I had a huge FOMO effect, like, why didn't I invest in Builder AI? Oh my god, I didn't go in them deeply, frankly. But this high level, when you look very high level, of course you think, yes, this was a success, it became a unicorn, I could have had extremely high IRR on this investment. But then it shut down because they overestimated metrics, the business model didn't work. And yes, there is a technology, a foundational AI technology, which enables a lot of new businesses, new processes, increasing efficiency, but there should be a product market fit. This business should be viable. And now the system will be somehow cleaning, as Elon Musk mentioned a couple of years ago, due to the high interest rates. Businesses that need to shut down, that should shut down, that are inefficient, they will close, and the strongest one will emerge. In AI, the same things will be happening. It will cool down the hype. But of course, in AI, there are high valuations today. If you go to VC something with AI, you should understand that you're competing with tons of other startups, and you should clearly explain how you're gonna outperform on this market.
In terms of if we're moving, thanks a lot for precedes we discussed quite deeply. I think we understood the profile of the founder, we understood the mistakes. You highlighted as well checks and how to enter the relationship with the VC. If you go in and discuss Series A, what's inflections? What's criteria you looked at? Founders, or technically startups already. I think not only founders, startups at Series A to invest. I know you working with the pre-seed and higher stages of the startups.
Sure. I do work with mainly pre-seed and seed. I love this stage. Founders are really central. They define a lot at this stage. And I also work with later stage when it's already pre-IPO. But many of the seed companies which I backed, they raised Series A rounds. So I saw what they have done in order to do that. So I would structure my answer here in the following way. So first, of course, the key metric, there is no excuse to be without revenue unless some rare cases emerge. And VCs will wait for metrics, even if you have a good relationship with them. They want to see revenue. They want to see path to break even. From what I saw, it should be 1 million plus ARR. And if you can explain how you should be growing faster than others, you need to explain how you move to profitability in today's world with high interest rate. It was not the case back in 2021 and before, where it was zero interest rate and you could afford growth at any cost. Yes, and you need to show real numbers, real revenue, and VCs want to understand how you're going to scale. Is it a one-time contract? Is it like a client whom you were lucky to close and it's really difficult to scale? How is your sales cycle if you're B2B? If you're a SaaS company, what would be the churn rate? What is the retention rate? Are the clients which you attracted, do they want to continue, stay with with your product, really, because it's not hard to retain customers for the period less than 12 months. But VCs very carefully look, would it be a sustainable business, or everyone would just churn away and move to somebody else? And, believe it or not, but on Series A and Series B, startups may not be able to show and prove this sustainable further growth. Reaching $1 million revenue, $2 million revenue is not a guarantee that they can scale further. And VCs, in the same way, like on pre-seed stage or seed stage, they want to see if they invest capital, would they grow proportionally? Because VC money is just a rocket fuel. And they want to put it in a very efficient model, in a very efficient engine. So getting money only makes sense when your engine is working. If it doesn't work, you put fuel there, but it will not fly, will not drive. So,
in terms of the business models, I have a question. From the side of the business model, what you can see the trend, maybe main business models? Do you believe it's the SaaS business model? It's changes by the time, or
yeah, the opinion about SaaS that it's already old school.
yes. That's what I'm leading to.
That it's dying out.
Yes.
And well, it's difficult to prove by metrics. Still, again, according to Carta, one of the most funded startup business models in 2024 and even in first quarter of 2025 was SaaS. AI operates in SaaS business model. I've been on a very interesting workshop a couple of months ago where an engineer from Salesforce presented his ideas. So he mentioned that today the new model is emerging, like result as a service. So you go to a platform, you pay for the result. I don't see it in leading AI companies today. It's still SaaS. Like look at Midjourney, look at our platforms we use every day. Yeah, so it would be great if it would have been like that. Maybe they would. I'm not sure that's lucrative for them. It's good for me as a user. But it really depends on many different industries. So, for example, in robotic startups, deep tech, hardware, SaaS models do not work. Actually, hardware as a service models they turned out to be really inefficient. It may be more efficient to partner with a fintech loan provider to kind of, match this. So if people want to pay a huge amount of money for some assets, they can somehow finance it with various B2B BNPL solutions and other things. So SaaS is good, is not always common. And also here I wanted to mention last thing. So if we look at the trends, what we see put capital today at Series A, it's mainly energy startups, fusion energy storage. One startup which really blew my mind was Etherflux.
Okay.
So they collect energy from space on satellites, and through air they transfer this energy to Earth. Can you imagine? I'm not Anderson Horowitz backed them. They are Series A. This is a Series A company which was backed during the past year. And this energy is booming in all aspects. I also saw companies in solar panels recycling. Today, solar panels are becoming more and more common, so you need to do something with the ones which are getting retired. Of course, AI is out there, but not only AI software, AI chips for AI. Infrastructure for AI, data centers, data center efficiency, cybersecurity, AI-based cybersecurity, and cybersecurity for data centers. And the third sector in Series A is biotech. Again, in various forms. Of course, the new drug development, early cancer detection, AI-based drug discovery. So if you look at those hyping most common sectors where Series A rounds flow from top VC, we would notice that SaaS is not the major model not the major thing there. They're all very different. Of course, humanoid robots are out there. Of course, we all know them. Yeah. So
In terms of the, I think one of the last questions is in terms of the example of maybe you worked on the startups and Series A startups. In terms of the example, how you help them to raise Series A funds, and then how you help this company to grow as a VC. Maybe you have
Yeah.
any examples of the Series A stage startup you can talk about. I know it could be publicly available, maybe not publicly available information. It's
Yeah,
your rights
yeah,
to
yeah.
disclose whatever you can.
Well,
Oh, interesting example, yeah.
yeah. I would say here that I indeed helped companies with their rounds, including Series A rounds. And typically, it's a good way when a VC, which is already part of your cap table, is helping you with warm connections and bringing some other investors with whom they are in touch every day. And now your portfolio company is raising a round. And so, if you are a seed stage company which wants to raise Series A in 12 to 18 months, in 24 months, today, due to macroeconomic factors of high interest rates, which I mentioned, are becoming much longer, and it's normal. It's okay. Money is really expensive. So bring as many VC as possible, which understand your sector, which have expertise, and have the credibility, and can show great signals to further investors which jump in. And also, what I've seen among successful founders who raise Series A and Series B, they want to engage on seed stage. They want to engage with with investors who have a mandate and have capital to back Series A. And when such founders close round on seed, they explicitly share what their vision and strategy is, what metrics they want to hit in order to raise Series A. And in advance, they discuss with VCs, okay, if I reach these kind of metrics, like users, revenue, of course, conversion, retention, would that be would you provide me with a term sheet? Would be willing to participate in a round, back the round as a lead investor? Not always VC can act as a lead investor in every round which is following. Sometimes it's prohibited by the LP documentation and mandate of the fund, but they can participate in the round. And when you have half of the round raised, you just go out to the market in a very strong position, and you just find a co-lead investor. That is you're almost the result is almost guaranteed, and you have the metrics cleared, but you start working on those metrics well in advance. That's critical. So you don't go and raise Series A round 1 or 2 months before you start discussing it. You work on it 2-3 years in advance and understand what you want to achieve to get there. And VCs typically know very well. They will tell you what they want to see to back you at Series A, because they do it every day.
The following question, the last question about this topic, about Series A. Actually, if you can give a couple of reasons why VCs for some of the startups failed to raise from VCs at Series A stage funds. What's the main reason? So they growing, they get into revenue. So maybe 2-3 points why definitely VC not gonna invest money in this particular startup at Series A.
Yeah, great question. From what I have seen, still it's metrics. It's an ability to get revenue. Sometimes founders can provide excuses which VCs will buy, but in the end of the day, okay, they can buy it on Series A, but they won't buy it on Series B, and the startup may not survive. I mean, why this is important? Because this is a signal that product market fit may not be reached, and that Series A, it must be reached. It does not make sense to pour money into the startup without the working model, without the working engine, because VC money is only used for scaling. So you show on small metrics that this works, and then you just put in capital and you grow. But you grow on the working business model, on the working, understand that you bring 1,000 users, and 70% of them will retain and continue to pay you for many years in a row. So VCs want to see validation. I don't see issues when a startup, I would say every single startup in my portfolio, those who are able to reach sustainable revenue, recurring revenue, ideally, which is why SaaS model is proliferating and flourishing, because all VCs want to see recurring revenue. Of course, such things like great, strong team, which has right motivation, committed founders, or maybe some hired top management. These factors and many other factors are very important. How you pitch, of course, is important for Series A, but the key metrics, the validation is really critical. And I haven't seen, if they were successful on seed stage, were able to convince great VCs, and were able to reach the milestone, I haven't seen the case when for some reason it would go bust, unless there is some founder conflict or some, legal issue which may emerge, patent infringement, some IP, some reasons may, or some competitor appears on the market, but typically you can track competitors well in advance. So again, usually if you follow the track which you promised to investors on seed, Series A comes almost automatically.
Let's talk about the final interesting topic about private angel investors and this segment, I would say, industry. If you can just give brief outflow and from point of the private angel investors in the UK, and whether it's feasible for the early stage founders to work with them first, maybe, and when they have no traction, no product market fit, no revenue,
nothing.
Nothing actually. It's just great idea.
Well, as I mentioned, UK ecosystem is the second largest after the US. And there is a great book, Venture Mindset, by Ilya Stribulaev. He conducted huge research on various topics. So ecosystem matters. If you are here, if you're lucky to be here, you have a lot of various tools in order to launch your startup, validate it as fast as possible. Don't go to VCs if you have nothing. But there are a lot of great players out there, like acceleration programs like Antler, industry-specific, industry-focused acceleration programs like Carbon 13, just from top of my mind, but there are really many of them, sector-specific. You can talk to various founders in your sector and basically get your feedback early on. Ask for, okay, guys, what did you do in order to validate your startup early on? You can check with experienced product managers, you can meet almost everyone here in order to find a way to validate your startup early on, validate your idea early on. So don't go to VC at this stage. They know very well that you can do it, and get the first traction. And then I would recommend to again get advice from pre-seed leaders, and even don't go to talk to angels first. Maybe to those who have industry experience. And first, I would say you need to talk to accelerators and organizations which can help you with various tools and instruments and experience which would boost you your knowledge, give really relevant advice for you. And then at some point you may start connecting with angel investors. Please pick those who are industry specific and get advice from them first. And from what I've seen, typically they like to advise founders. Their motivation is to help, not only with money but with their experience and background, and that's how you can start building relationship. And at a certain point of time, they will invest. VCs actually also like to build relationship. They can issue a term sheet, especially pre-seed. We did it like that as well. I mean, we've been almost like an angel investor, but a little bit more systematic in the way we source. So we could, for the founders we could issue a term sheet for 1 or 2 months, and they can go and raise with it, and we can give advice to them in parallel. Build win-win relationship, maybe help them with connections, help them with applying to some acceleration programs, bring some extra investors or employees to them, and then if we see that their round is forming, we just execute the term sheet. Angels can do the same thing. You can build a relationship with angels in the same way.
I think just if you answer in short, so we can jump on a interesting topic, but in terms of the role of what's the role of the angel investor at the early stage? So for instance, I have an angel investor, what should I expect as a founder? So in summary, it's just a person who has experience and who can share, or a person who blindly believes in you that you can go to the next stage on the pre-seed stage.
Angel investors, from what I recently interviewed a couple of founders, including my portfolio companies, how they work with angel investors, what kind of value they bring, and what do you like about it, and like many other aspects. And I also talked to angel investors as well to understand what their motivation is. I've done it. I've been part of Product Creative Lab, and I've been doing research while exploring various product concepts around the angel investing in the UK there. So what I identified was that the key findings are founders really value angel investors, and angel investors help a lot at this stage. They can help, starting from, of course, they bring some capital, they bring connections, and they are very motivated. Typically, founders who are entrepreneurs themselves are very helpful, and that's feedback from the founder who raised from them, because they want to help their peers who are at the early stage. They understand that this path is very complex and it's very tough. So sometimes these angel investors can act as early employees. That's amazing. And sometimes you even don't need to pay salary to him because
So it's angel employee.
Yeah, so it's a great combination, and there is a win-win situation. And typically those angel investors have been in the industry for a while. They have skills, and they are very motivated to bring success and to make your startup a success, which sometimes can be much more efficient than just hiring an external employee. So there are various forms how this operates. From what I hear in general, it's a huge help, huge support for early stage founders. Important to note, from what I've seen I was also working with angel investors who backed our portfolio companies. Typically, angels have their own specialization. Like, would that be some B2B sales in a specific industry, or it can be fundraising specifically. So if you're a founder, it makes sense to understand what the strong sides or what the specific skills of this angel are, and try to build to find a way to kind of find synergy with this angel investor, and I saw very efficient. I saw great results on how this can work. So founders raise multi-million-dollar rounds. externally, not from this angel investor, but if the founder is motivated to work hard and to get best advice from angel investors, it can be really efficient, because still the industry of VC works with playbooks. VCs expect something from you, and this is not a magic thing.
In terms of the, I think one of the question, in terms of the founders, what they should expect, the equity size and the ticket to raise from the private angel investors in the UK, in Europe. So what would they expect? 5,000, 50,000 pound.
As I mentioned,
approximately trend.
Overall, angel investment rounds have been around $300K US dollars. Plus minus. But don't expect it to be really much larger. So average, typically the angel investor would put in from 10K to 50K on average. Of course, there are super angels, but even super angels want to diversify. They would better invest smaller checks in larger number of startups. Of course, they try to be careful. They don't want to just put spray and pray. The spray and pray strategy doesn't really work well. It still works. It's still applied by many VCs, but it doesn't make sense. Angels want to build relationship with you, want to understand how they bring value to you. They wouldn't invest. But on average, checks are from 10K to 50K. So you need, in order to raise full angel rounds, like full angel round of 300K, you need 5-6 angels out there.
Thank you. Alexandra, just the last note, I'd just like to ask you maybe short advice to the founders. From point of the VC, what do you advise for the founders, how they should start their road and the relationship with the VC, maybe in a couple of sentences?
Yes. Firstly, if you're on the pre-seed stage, seriously consider accelerators, incubators, especially top tier. There is around 70% chance that you will successfully raise the next big round in 2 years. This is a data-proven metric. I can send it to you after the show. Secondly, talk to the founders which went through this already. And not only one or two, talk to several of them through warm connections. And they will give you a lot of very helpful advice. Maybe introductions which they make can be invaluable for you. And finally, try to get to product market fit, especially if you're exploring new markets like US. You're in UK, you want to go to US, go and validate it first with minimal resources, and only then decide whether you want to launch there or not. It doesn't work the other way around. You need to, I've seen many cases when product is very successful in UK or in other parts of Europe, and it just has no market in the US because of different mentality. So first thing you want to do, go and validate this market, collect metrics, and use the data-driven approach.
Yeah, thank you very much. Thanks for having us today. So coming to the podcast, it was a good talk. So we covered so many points. Yeah.
Thank you, Evgeny. Great questions.
Thank you.
Extremely amazing community which you are building.
Thank you.
I'm so happy to be part of it and engage more. Thanks for inviting me today. If you or other people from Tech Nomads have any questions, I'm always happy to answer. I'm out there on LinkedIn or in other social media.
Thank you much. Thank you.
Cheers. Thank you. Cheers.